Okay, let's try this again. I'm David Loundy. I'm Chairman and CEO of Devon Bank in Chicago. We are about a 68-year-old community bank, and we have delusions of grandeur, so we try to expand out and help people wherever we can. Before I start on my prepared remarks, as I used to say when I taught law school, I have an outline, don't make me use it. I'd like to take a bit of a diversion and talk about the materials that were handed out. And I don't mean this to sound unduly critical, but I looked through the materials, didn't read it in depth, but I have some issues with it. And I hope that we will be able to work on these and address some of those issues before they're in final form. But I was concerned because I think the materials give a bit of an improper impression of the industry and where it is right now. These materials are presented from largely one perspective. And the difficulty with Islamic finance in the US is it's essentially the bastard stepchild of about 5 different parents. You've got the Islamic law, you've got the US law, you've got the US financial system, you've got customer needs and demands, and you've got business necessities and realities. And all of these have to be factored into one product. Some of this material questions the intent of some of the providers, and rather than question the intent of the providers, I'll simply tell you what the intent of this provider is. We created our Islamic finance products as a result of community demand. That's what community banks do. We do what our community asks us to do. Whether it is providing non-interest-based chederiska finance for the Orthodox Jewish synagogue that wants to buy a property, or whether it's creating a Sharia-compliant standby letter of credit for somebody who wants to import a container of socks from Karachi, we have tried to accommodate whatever our customers need. Our Islamic finance program started about 11 years ago as a result of one customer, and I can mention this by name because it's been discussed in the press somewhat. The ICRA Foundation came to us and wanted to buy its book center on Devon Avenue, a bit up the street from our headquarters. Want to buy a storefront, can't pay interest. Can you help? Our answer was no. The only place they could find commercial Islamic finance was the United Bank of Kuwait. When UBK got bought out, they came back to us and talked to my colleague Nazir Gurukambal and said, okay, how about now? And he made the argument to bank management. This was a little before I joined the bank. It's a family business. My family owns the bank. And said, there's really an unmet need here. This is something we ought to look into. So we looked into it and said, okay, yeah, this is something that we can help with. Now, the United Bank of Kuwait's product was an Ijara product. So we originally started by creating an Ijara product. And I'll get to that later this afternoon. This focuses on the Murabaha product. We realized that the Ijara product wasn't going to work because of tax issues. Again, 5 parents. One of them is the US financial system, one of them is the US regulatory system. They were going to have tremendous tax problems using an Ijara because they are a nonprofit foundation. So we started by creating next the Murabaha product. This is simple in concept, as has been discussed. It is simply a cost plus sale. We buy the property, we turn around, we resell the property at a marked up price, paid over time at no interest. Now, a requirement of the product is transparency, not the time element. So to be a proper Murabaha, they have to know, what did you pay, what's your markup, and then you can sell it on. When we started looking into residential finance, it became fairly clear that this was going to be the preferred product, in part because it's easy for customers to understand. At the end of the transaction, you have a mortgage and a note. People get that. It's easy to document. There's a mortgage and a note. For some customers, we found an element that was important that we didn't expect. which was they wanted to be entitled to the property. They wanted it to be their property, not the bank's property. Again, one of the 5 parents, customer needs and interests. We also found that it was easy to explain to investors and get the investors to buy in. Shaykh Yusuf discussed Fannie Mae and Freddie Mac, but most people don't understand the scope of these companies. Both of these companies are straddling the $2 trillion mark on their balance sheets. All of Islamic finance in the USA is a rounding error on Freddie Mac's balance sheet. Freddie Mac considers it to be important because they're helping to bank the unbanked, but then Congress is talking about dismantling Fannie Mae and Freddie Mac. If this happens, retail Islamic finance will disappear overnight. We have made a number of attempts to get investors from the Muslim world interested in providing Islamic finance liquidity in the United States to stand in as an investor. We have been wholly unsuccessful. It's very hard to sell a 6% financing transaction in a country with 9% inflation. Now, it also has to fit on our computer systems. It has to be a manageable product. When we had our initial discussions with the Sharia Board of America, who we worked with in creating the product, they would say, oh, this is simple. This is how you do it. And our first response is, well, that's nice, but what customer is going to want that? And the second response was, okay, but how do we track it? How do we, understand who's paying what for what and when they're done? Now, a Murabaha transaction has the advantages I mentioned, but it also has some disadvantages. It's a very inflexible product. You set up the transaction at the beginning, you can't change it. That's sort of the way all of the products work, but there are few pieces that move in a Murabaha transaction compared to something like an Ijara transaction or a Musharaka. We can't offer Musharaka through a bank because the banking regulators have said Murabaha is okay, Ijara is okay, Musharaka has not. When your only tool is a hammer, every problem looks like a nail. So we have made these products work to do a number of different things, but it's an inelegant solution. It's just the only tools we have. It's very much fitting a square peg into a round hole. Terminology matters. We've seen a lot of mistakes made because of the words that are used to discuss it. These are not loans. They're financing transactions. There is no interest rate. There is no borrower. There is no lender. There may be a debtor and a financier, but there is no interest rate. It is not a loan. It's not a loan, but it's a credit transaction. And as a credit transaction, it fits under the truth in lending law. Truth in lending law, but it's not a loan. You start to see where the problem fits in. You've got the 5 parents. You've got the Islamic law and you've got the US law, and they don't get along well together. As a result, we are required to give disclosures. The disclosures are nonsensical. They don't make sense. We have worked with various government agencies to try and get them to make sense, and they refuse. They are afraid of embarrassing themselves in front of voters. That's why you don't have clarity on things like some of the tax issues that apply to Islamic finance. Now let's talk about what makes a proper Murabaha contract. This has been discussed at some length, so I'll skip through some of this pretty quickly. I'm hoping the question and answer period will be the most valuable part than hearing me speak. There has to be a valid sale. The object of sale has to exist at the time. You can't sell a phantom. The subject of the sale has to be owned by the seller at the time of the sale. When we do a Murabaha transaction, the property is deeded to the bank. We own it, and the next item is there must be a risk of loss. We have the risk of loss. This is required for there to be a proper Murabaha transaction. Close is not good enough. Think of it this way. Pull pin, open window, throw grenade. The actual order matters. If you get it wrong, you have a problem, or at least not a valid Murabaha contract here. We have asked various scholars who said, oh, you don't own the property long enough. You don't have enough risk. And our response is, please tell me, what is the required amount of time? What is the required amount of risk? If you have an authoritative answer to that, we would be very interested to hear it. We have been given no answer to that question. So we do what makes the most sense to accommodate two of the other parents, business reality and the US regulators' view, because the Sharia parent hasn't answered the question, hasn't voted on that issue. The sale has to be instant and absolute, not contingent, not an issue. The item sold must have some value. When you're dealing with $250,000 transactions, there's usually value there. Subject to the sale must not be haram. We are not doing Islamic financing on distilleries and casinos. Subject to the sale must be specifically known and identified to the buyer. If you have 4 houses, I need to know which one you're buying. Delivery must be certain and not contingent. Certainty of price must be agreed. Sale has to be unconditional. For an installment sale, we can structure the installment however we see fit, but it has to be calendarable. You have to be able to write down on the calendar what is owed and when, so that people understand how the payments work. The sale price has to be fixed at the time the transaction is created and can't be changed. This is a big issue, and we can get to this as we discuss this. Some schools of thought say there can't be a late payment. The issue is you cannot increase the debt if somebody isn't paying. There are other schools of thought that say, now wait a second. You can't penalize someone for hardship, but you can encourage responsibility, but you can't profit from it. So one of the most heavily negotiated provisions of our contract is how we handle late payments. If you don't pay on time, but you come to us and say, the reason why I did not pay on time is because I lost my job and I don't have any money, there's no late payment owed. That would be increasing the debt due to hardship, and that we don't do. But if your answer is, I went on vacation, I forgot to mail the check, that's your problem, not mine. There is a late payment due then. We offset our costs of collection, the rest gets donated to charity. We're not profiting from the late payment, but it's there to encourage responsibility. Acceleration of debt upon default, we've told, is allowed. You made a promise, fulfill your promise. If you don't fulfill your promise, then we're going to enforce the promise because that's what one of the parents requires. You know, we are not forcing you into a transaction that you didn't agree to, but you did agree to this, and we detrimentally relied on this. We are out money. We have invested in you. It is our money tied up in your house, and we expect you to do what you promised. Granting of additional security to secure that promise is allowed. That's why there's a mortgage. You're going to pay us, we're going to put a lien on your house to make sure that you do. One item that doesn't come up with us, but it does come up with some potential transactions that we looked into at one point and abandoned, is for a Murabaha, the financing has to be tied to the need to the commodity. And this is the commodity Murabaha, or the tawarruk issue. You have to buy the house because you want the house. It is not a mechanism to incur a debt because you need more cash and you have no interest in the house. And that comes up with our contracts, and that was one of the criticisms here. If you are investing in a house because you're going to use it, we are evaluating the risk based on what we know about you and how people like you tend to act. And the risk profile of someone living in a house is different than the risk profile of someone who is speculating in real estate. So if you are not going to live in the house after you have promised us that that's what you're going to do, you lied to us in our risk evaluation. We now based our agreement to enter into this transaction on a fraud. and that's a problem for us. That's why it's structured the way it is. Let's talk about some practical issues. The mortgage is used to secure debt, but it looks very much like a standard Fannie Freddie mortgage because that's how it was originally created, but there's no interest rate in it. That causes issues. There are tax complications, and there are tax complications because depending on what state and sometimes what county you're in, there is principal and there is interest. In an Islamic financing transaction, it's all principal. If it's a Murabaha, buy a house for 100, sell it for 150, you owe us in debt 150. If you go to New York and want to buy a house with a Murabaha, they tax the principal. It's now 150. That's a hugely expensive mortgage tax. We don't do a lot of Murabaha transactions in New York as a result. We talked about late payments. Prepayments. Prepayments, and I'm running out of time, so I'm going to skip kind of quickly through the rest of my issues. This is the next most heavily negotiated portion of our contract because the debt's 150. So let's say you want to move after 6 months. Your job got transferred, got to go. How much do you owe us? Well, you agreed to pay us 150, so pay us 150. Well, what the customers are really asking is, if I pay you now, will you accept a discount in exchange for that early payment? And we originally had in our first 3 or 4 Murabaha contracts a checkbox. And there were 3 options. Option number 1 is, I agreed to pay 150, I will pay 150. Option 2 was a very carefully rehearsed answer. The bank, at its discretion, may discount the debt in exchange for early payment, but we can't agree in advance as to whether or not there will be a discount and how much any discount will be. Option number 3 is, yes, I expect a discount and it's going to match the amortization table in Exhibit D. The Sharia board looked at this and said, okay, time out. Option number 1 is, from a Sharia standpoint, entirely correct. We may be Muslim, but we ain't stupid. Nobody's going to check box 1. Although it's permissible, it's not the only permissible answer. Option 3 is not Sharia compliant, take it out. That left us with option 2. So the bank, at its discretion, may discount the debt in exchange for early payment. Now with that, I'm about out of time, so I will turn over the panel, but I look forward to your questions because that's when we get to the good stuff and I know what's really important to you all. Thank you for your attention.
Test. Thank you. Should I start? بسم الله الرحمن الرحيم الحمد لله رب العالمين اللهم صل وسلم وبارك على محمد وعلى آله وصحبه أجمعين اللهم نور قلوبنا بالعلم وزين أخلاقنا بالحلم وافتح بيننا وبين قومنا بالحق وأنت خير الفاتحين اللهم افتح بيننا وبين قومنا بالحق وأنت خير الفاتحين اللهم افتح بيننا وبين قومنا بالحق وأنت خير الفاتحين ثم أما بعد السلام عليكم ورحمة الله وبركاته وطبتم وطاب ممشاكم وتبوأتم من الجنة منزلا بإذن الله عز وجل ثم أما بعد. Up to this point, I think, and I might be wrong, that we are still discussing the symptoms of the problem, but we are not diagnosing the problem. The diagnosis, in my opinion, is that we are trying the diagnosis, in my opinion, and again, I always might be wrong, that we are trying to integrate an Islamic finance system with all its ideology and methodology and objectives with the other non-Islamic one, the dominating, the global, the universal, the capitalist economic and financial system. And due to the severe incompatibility between the two different systems, we are getting stuck in the middle. In other words, dealing with interest in the capitalist economic system or the capitalist global system is something actually comes by default. I could not even imagine a functional financing system here in the US or even abroad that does not believe in loan as a mode of finance. Well, believe it or not, the Islamic finance system that we teach and we try to practice, loan is not a mode of finance. You see the very, very clear contradiction, and again, we are getting stuck in the middle. Now, the fact that we are living here in the US and we are trying our best to find a solution or way out to integrate with the system, that's something highly appreciated. And I'm here on behalf of Amja. I would like to really thank every single individual brother who came to this conference, especially from the Islamic mortgage companies, to get together and to have the right forum of discussion. Because if you all remember, back in 2005, I do not think when we get together in one of the Imam's workshops here in the US through Amja, I don't think we had the same opportunity that we are having today of sitting together and just listening to one another, making sure that every single person is on the same page. I would love to see one of the Sharia advisory boards of Devon Bank, but maybe for some reason or another, they couldn't bring.
He's out of the country.
Out of the country. And I would love to have a Shaykh or a scholar from Devon Bank so we can communicate and see what's going on. Regarding the Murabaha of Devon Bank, I mean, this is just an introduction to the topic. Having said that, different attempts here and there are trying to hook up, to integrate with the system, try to, what is so-called nowadays, Islamizing the financial system. And I don't want to be like a pessimist, as they say, but I'm trying to be more practical. Now, there is a reality that we have to live with, that it is very, very close to impossible to fully integrate an Islamic financial system with all its ideology and methodology and objectives with the non-Islamic one. And what we are doing so far is that we are limiting ourselves due to our weakness as a Muslim community at large, or not being that strong or outgoing community. We are putting ourselves in the corner. We have Freddie Mac, and everybody is revolving around Freddie Mac. We have to comply with their rules and regulations. We did not try seriously, maybe some individual attempts here and there, to get out of the box, to bring some money from overseas, from Dubai, for example. On a very individual basis, I did it myself. I tried many times to contact some of those Islamic banks in the Middle East, and subhanAllah, it didn't work out for a reason or another. Although I'm not in business, I'm not a competitor of Devon Bank or Guidance, but I'm trying my best to take the responsibility of finding a solution. So as long as we are connecting ourselves with the current financial system, I don't think we can find a way or another to have a genuine, a sound Islamic financial system to finance for our homes while working within the non-Islamic financial system. Let me put it this way. Having said that, we have two different papers have been submitted to this conference regarding the Murabaha of Devon Bank. The first one by Shaykh Jamal Zaraboz, Rizallahu Khairan. And I did submit the second one. SubhanAllah, although it's not planned for, but there is no overlapping between the two different papers. Shaykh Jamal Jazakallah Khairan focused on the fact, or he made an argument, that there is no genuine or true or sound ownership involved in this process. And he made himself very, very clear. He had a very informative introduction to the topic, where he shared one of the official documents had been issued back in 1999 to show that even if you want to go, well, there was an attempt for one of the banks, Allahu Alam, which bank it was at that time, to establish a Murabaha system. And they received an official letter. I will give the microphone to Shaykh Jamal, inshallah, to explain more about his paper for a few minutes, inshallah. But he made himself clear that a genuine and real ownership is not possible. He made another argument that there is no binding promise from one party, which is the very specific point that our Shaykh, Dr. Salah As-Sawi, Jazakallah Khairan, discussed yesterday, versus the mutual binding promise by the two contracting parties. المواعدة الملزمة versus الوعد الملزم من طرف واحد. What happened is otherwise, that there is like a mutual conversation or agreement between the client of Devon Bank and the landlord, or the supplier, or the seller, whatever you want to call him, the owner of the house. So they made their own agreement. And the supplier himself asked for a down payment, or earnest, sometimes they call it, like arbun, unrefundable. And the client has no choice but to pay it up front, and then contracting Devon Bank to finance for this transaction. So although on papers there is a kind of possession or ownership, but it's more to be nominal, symbolic, than to be a true and genuine one. And he made the Shaykh Jamal Jazakallah Khair long discussion regarding the fact that if there is no real ownership in the beginning, then the whole transaction is void. Based on the hadith of the Prophet ﷺ, لا تبع ما ليس عندك. Do not sell what you do not possess. Before I go to my paper, maybe some people look at me as the bad guy who prohibits everything, but that's fine. I will take it as a compliment. I'll give the microphone to Shaykh Jamal, inshallah, for a few minutes to make this point clearer. Shaykh Jamal, would you please kindly? If you can summarize it in 2-3 minutes, and then inshallah I will move on with the other 3 more minutes to discuss my paper, please. You're good to go.
السلام عليكم ورحمة الله وبركاته. الحمد لله الحمد لله والصلاة والسلام على نبينا محمد وأشهد أن لا إله إلا الله وحده لا شريك له وأشهد أن محمدا عبده ورسوله. Actually, I wasn't prepared to speak, so I don't even have my paper. I had to borrow the paper from one of the other brothers here. One of the points that I was making, and by the way, let me, if I may, comment on something earlier first. One of the points that I made at the end, which I think Mr. Loundy did not like, perhaps, what I said. What I was saying there at the end is that these banks, who are just regular banks in the United States, they are not entering into Murabaha or Ijara or Islamic finance because they don't believe in riba. Okay, that's not the issue. The rest of their banking is going along day by day. They don't seem to have any issue with the concept of riba. So if someone like that, and for whatever intention, and I said, in the one case I said supposedly the noble intention, and the other one possibly the non-noble intention, whatever the intention is, if this organization is known to accept and have not any issue with riba, it would not be surprising that if they were to do a contract that is really riba, a kind of hidden riba from Sharia point of view, and they don't see any issue with it. So I wasn't necessarily saying that their intention is evil, but as you mentioned, and as in the interview that I quoted from you, you mentioned that it's a matter of consumer demand. You have consumers, you have Muslim consumers, and so therefore you're trying to meet their needs. So you're trying to meet their needs in a way that is acceptable to them, but in a way that is acceptable to you as well, because that's also one of the five. And the way that is acceptable to you as a general practice doesn't necessarily involve a prohibition and a dislike of riba that a Muslim should possess. So I just wanted to comment on that since you made that point earlier. The other issue that I mentioned also is related to the office, the letter from the interpretive letter from the office of the controller of the currency, which deals with Murabaha. And I'm under the assumption, and there's another paper also written that says that the basis, I can ask you now since you're here, the Devon bank's Murabaha, the acceptance of that by the banking industry, is that based on this interpretive letter?
In my perspective, that opened the door.
Okay, all right. So one of the issues that is very clear is that banks in the United States, for different reasons, banks are not actually allowed to own property. They have foreclosure, and so there's some exceptions to this, but basically they're not supposed to take their customers' money and their investors' money and put it into risky investments. And there's some other stories about the law, the history behind that law as well. But they're not allowed to actually own property. Okay? So when they do own property, either through Murabaha or through Ijara, they make it very clear, and the interpretive letter made it clear that they don't become the real owners of that property. It is a name only, and it is more of a fictitious legal thing than anything else. So it's not the matter of time. It's not the matter of time. You could actually buy it and own it and then quickly resell it. But you have to be a full and the real owner of that. And some of the signs that I have issues with, number one, the customer actually pays earnest, either like a deposit to the buyer of the house. So the bank, you have the bank, to the seller of the house. You have the seller of the house, you have the bank, and then you have the Muslim buyer. So the bank actually, at no time, if the house is $150,000, or let's say $100,000, and the Muslim put up $10,000, the bank who now is going to own it actually never pays $100,000 for the house, because that $10,000 goes into their account or is on their behalf. So it's like the Muslim buyer is now giving Devon Bank a loan for $10,000, and as a result of that loan, they are now going to get the house, which, by the way, is another issue of benefiting from the loan. So at no time does actually Devon Bank pay the whole money for the house. They do not pay all of the real estate transactions and so forth that would make them the owner of the house. According to the interpretive letter, they don't take on any of the responsibilities, legal responsibilities related to warranty and so forth of the house. And so therefore, it is not a true ownership of the house in which they turn around and sell it to the buyer. So I think I've taken enough of Shaykh Man's time. So I think he deserves a couple of seconds more. How many of these did you put on me?
Because of the time constraint, I wish you can just scroll down. I'm sorry, you have a hard copy. Go to my research. As I said in the beginning, there is no overlapping or intersection between my and Sheikh Jamal's research. I went straight forward to the contract itself, assuming that the ownership of the bank has been done appropriately. And I made like a disclaimer in the beginning that this is an applied research. Applied research, I'm zooming in too much to the actual contract regardless of the process of the transaction itself, or the flow of the transaction, or the order of the transaction. What comes first, what comes next? Is there any real time between the ownership of the bank, if there is any, versus reselling the property to the client or not? I did not discuss all these, and alhamdulillah Shaykh Jamal Jazallah Khair did. So I went straight forward to the contract itself. You can see B, Murabaha contract, and I discussed a few points that grabbed my attention, in which I came up with a conclusion that who is the owner of the property here? I mean, if the client has like tight hands, he cannot sell, which is fine. He cannot rent. The bank does have the right to declare the default of the client. If the bank thinks that there is a financial instability from the client side, that he might be unable to pay systematically, periodically, then he does have the right to stop, the whole transaction and on and on. So the insurance, for example, you can read covering the amount of the outstanding Murabaha debt for as long as any part of the Murabaha debt is outstanding, meaning that the bank is imposing this kind of insurance on the client himself. So in case of default, the bank would secure his money through the insurance policy, and the list goes on and on. I wanted to go to the very, very first page of my research. Actually, the cover page, I made another disclaimer. Results are not final. Please do not share, and I do mean what I have written here. Those are my personal observation. I'm not making decisions. I'm not passing a judgment on those companies. We are here to have a very academic, scholarly discussion, and I'm really, really grateful that all the representatives, or most of the representatives from those 5, 6 different companies that I did my research on are alhamdulillah here. So we need to sit down and just talk together. We are not in a rush. We don't have to come up with a conclusion or declaration toward the end of this seminar, of this conference. And in Amja, alhamdulillah, we have a very clear-cut process. We do allow ahad al-muftin, a mufti, to adopt whatever he thinks is correct. However, this is his personal opinion. In order for us to give it like more authenticity, it has to be adopted by the fatwa committee. And even whenever it is adopted by the fatwa committee, it became like a recommendation. We have to take it as is for the approval of the General Assembly, which is 50, 60 different scholars from all over the world. They have to say yes for this, fatwa or no. So up to this point, what I have adopted, as I said, is my personal opinion, and I'm open to hear, to listen, to learn more than to stand and to educate. Jazakumullahu khairan. Wa sallallahu ala Muhammadin wa ala alihi wa sahbihi ajma'in.
No, you're just going to stay there, inshallah. So currently, we're going to then open it up for Q&A. And alhamdulillah, this session here, we have about 35 minutes for question and answer. So basically, this session will end at 12:30. So please, those who do have anything of questions, we ask that you line up. Once again, we remind you to please state whatever it is you're going to state of a concern, of a question, within a minute, please. And we also hope that the responses can also be limited to about 3 to 5 minutes, so that this way we can give enough time to everybody that is standing patiently, please.
That's more than enough, Hassan. I don't want to talk a lot.
Assalamu alaikum. I personally invest in real estate, but I pay cash for my investment. But I have some idea about real estate. You are trying to engineer a financial system to be a hybrid between two systems that they are, as you said, incompatible. My first question is, what are your other options? Because the customers, you like it or not, they will go to the bank and they will comply with the bank conditions, and this is the reality. The second question to the CEO of the bank, if I bought a house under the Murabaha, and I paid for 5 years, for example, $1,000 per month, that's 60,000. If you accelerate the payment for one reason or another, what is the faith of the 60,000? How much do I owe for it? Is it rent? There is a residual will come back to me? This is really very important because we cannot guarantee the financial conditions of everyone. This will happen and you will face it. And foreclosures are a good example for that. Thank you.
Well, there is an ideal solution and there is a practical one. The ideal one is to declare our independence and to start our own financial system, which is impossible. It takes a lot of time and effort to build our own institutes. And the practical one is to take this conference as just a raising flag, that there is something fundamental in those banks that have to be taken into consideration. My third point here is that I think Dr. Hatem Al-Haj raised this point early in the morning, that there is a difference between the explicit riba versus the implicit one. Now, if we came up with the conclusion that those contracts do not represent explicit riba, it's not a conventional mortgage process like when you go, for example, to Capital One or to go to Countrywide, there is some hidden riba, there are some glitches here and there, but the contract is still murabaha, is still ijara, is still diminishing partnership. Then because of the overall need, then we can just I don't want to say like overlook. I mean, we can come up with a dispensation, with a rukhsa, with a license, with exception, and say, well, for the time being, because there is a need. By the way, there is no necessity. There is a need. There is an overall need for people to own houses. I'm talking about myself. I'm paying $1,850 per month as a rent. And if someone else want to go through the regular option, maybe the same house could be bought for only $1,000. I will be saving a lot of money, and at the end of the day, the house will be mine. But this is halal and this is haram. ذلك بأنهم قالوا إنما البيع مثل الربا وأحل الله البيع وحرم الربا. Back to the point, it has to be a collective fatwa, not by an individual mufti like me, like a fiqh council or more than fiqh council have to get together and say, yes, there is a desperate need, not desperate, overall need for Muslims in the US to own houses. Those contracts are acceptable enough. Okay, you can go with Devon Bank, regardless of my personal approach that I adopted in my research. I wish I answered my part. I will give the microphone to Mr. I'm sorry. Oh, you have your own?
Yeah.
Okay.
To touch just quickly on
you can keep sitting, David.
So everybody can see.
Just keep your smile, please.
To touch quickly on your first question, we have tried to create better products. Our position is, as a non-Muslim financial institution, if we are to have credibility, we have to have the most Sharia-compliant products available, and that is what we strive to do. Those people who don't care as much will still use our products. Those people who care more, we hope will still use our products. We understand that there is a spectrum of belief, and we will never hit the far end. And we're okay with that, because nobody's going to hit the far end in a regulated environment. We have tried to create a beginning-to-end Islamic bank. We've tried 3 or 4 times now and have not been able to raise the investor capital. Even if you create an Islamic bank, and we will try again, it still can't do anything more than the regulations will allow. So you're still working within a regulated environment that controls things more than some people would like to have happen. As to the second question, you have an asset and you have a lien against an asset. Your asset varies in value. If there is value there and it's worth more than the debt, you're going to sell it. I'm not going to take it away from you. You're going to sell it to somebody else, and you're going to pay off the debt, and you're going to be done. What the real question is there a deficiency judgment? If I enforce your promise to pay, and I enforce my lien, and I take the property away from you, and I sell it for more, do you get anything? The answer is, it's my property now. I took it away. If you want to negotiate with me before we get to that stage, we're having a very different discussion. But a foreclosure is a last step. It's not a first step if something has gone wrong. If we've gotten to foreclosure, this has been probably a 2-year process in which you aren't paying, and it shouldn't get to that stage if there's real value. If the value is not there, and we do take away the house, and we sell the house, and we cannot recoup our money, if we're not allowed a deficiency judgment, which I believe is the way our contracts are stated, and you can check them yourself, anybody can check them, then we're done. Because you made your promise, we made our promise, you didn't perform, we did perform, but our relationship has ended, and it ends with the asset. If it's a conventional loan and a deficiency judgment is allowed, now I can chase after you in everything you hold dear until I get every last penny out of you, even if I have to sell your dog to do it. This is not the case with a Murabaha.
Follow-up question. Is it a deed for contract similar to that? A deed for a contract?
It is very similar to a deed for contract.
Muslims are not allowed to own
Can you
dogs.
just elaborate on the deficiency judgment, Dr. Imam?
Take the mic, anybody who wants to speak, please through the mic.
Maybe it'll come up in the questioning. So inshallah,
It will
let's
come
go
up
to
in
the
the
next.
question. It will come up.
Unless everybody knows what deficiency judgment is. Okay,
Wait until you're through.
Alhamdulillah Rabbil Alameen. Just, I believe that this is a very, very important point, this of deficiency judgment and non-recourse financing. And I don't want it to just pass and people not know the importance, because this is a very important distinction between your product and a conventional product. So if you can just elaborate on what this means in the context of non-recourse financing.
A deficiency judgment is if you owe me 100, if you owe me 100 and the collateral is worth 80, and I sell it and I get back the 80 out of the 100, what happens to the other 20? If there's no deficiency judgment allowed, we're done. If there is a deficiency judgment allowed, then I can chase after you and your other assets to get back that 20. That's the difference.
I think there is a deficiency even in the Murabaha one. Please correct me if I'm wrong. The contract itself indicates clearly that you do have the right, to chase your client and to collect your money. You do have the right to set off or to freeze, even the assets or the bank accounts with Devon to get your money, because as you said in your presentation, that the price is fixed already. There is nothing called capital or principal versus profit. It's just a lump sum, 100 versus 150, and everybody is happy. So whenever there is a deficiency or default, as you call it in the contract, then you do have the right to, according to your term, to chase him and to get your full amount. Please.
The right of set-off I will have to look into more specifically. I believe that is a Freddie Mac required provision. And we still can't take more than we're owed. But it gives us the right to tap into that money should we need to.
To collect the whole amount, the whole outstanding balance. I think this is my point.
But the issue is, do we have the right? And what language do we use to get that right?
Yeah.
And I don't believe we have a lot of flexibility in the language that we use. That language, in essential,
Right.
it matters in the enforcement, not in the
So you're going to review it, just look at it.
Yeah,
again.
it's worth looking at, and it's
Sure.
worth trying to remind us of why is it there, and is there flex in it?
Okay.
And to the extent that you have a problem with it, our perspective has always been, if you can show us how to fix it, and there's something not right, we will look into that.
Assalamu alaikum, jazakumullah khair. First of all, thank you for the providers for those services. I basically have just two questions. One of them is there a way we can make Amja
Whom
be,
you want to ask, me or any of the gentlemen?
basically it's part of it is through Amja. I believe Amja
I'm
as a
not
whole.
Amja, I'm man. You wanna ask me?
I know it's man, but I'm saying this question for everybody here
Just
that being involved in Amja. Is there a way we can make Amja being a part of the process of anyone who wanted to have a financing solution for himself, for example, as a trustworthy society, or let's call it this way? or not?
Wallah al-Karim, we are trying our best to do our business as professional as possible. Amja is a fiqh council.
Okay.
I mean, this is our job. I mean, we receive questions, we come up with answers, we issue fatwa, but we are not in the industry. We are not in the business. We cannot be a part of those companies, not even in their like Sharia advisory board, because this might be a conflict of interest. So we are completely independent. We do cooperate. We listen. We learn from them. We take their notes into consideration. We get back and make our own decision. But we cannot be, to the best of my knowledge, maybe our Shaykh Dr. Salah Sawi is here. He is the Secretary General of the organization. But to my understanding, we cannot. I mean, that's different areas of specialization. We are not in business.
Okay, the final question is about, are we going to have a conclusion at the end of the conference about which the best solution that Muslim can take or not?
I think the issue is way deeper than what we think. Jazakallah khair, Sheikh Yusuf elaborated on some of the rules and regulations and industrial challenges that, I mean, this industry is facing here in the US. All these dimensions have to be taken into consideration, because as you know, there is something in fiqh called الحاجة العامة والضرورة ومشقة الاحتراز وإلى آخره. So all these dimensions have to be taken into consideration to come up with a realistic solution based on the need of our Muslim community, and obviously without compromising our principles. I don't think we have enough time during the convention itself. Maybe it might take us weeks or even months, I mean, to get more details, to get together with those respected gentlemen from different companies, and to understand more before we come up with a conclusion. Allah.
Okay.
Bismillah. This question is for Mr. Loundy, I believe. Yes. So two really short questions, to which I hope I get long answers, though. First is the penalty for late fees. You mentioned that it's going to charity in Devon. So I would just like to know that in Islamic law, you're not supposed to take any type of benefit. So is there any benefit at all in terms of PR relations when you're actually going and giving that money to charity? Do you put your banner up, when you're feeding the poor, or whatever you're doing? Is there any type of benefit at all that you're getting out of that? That's number one. And number two, you asked us why can't Muslim scholars give us a specific period of how long we're supposed to own the property for in order to determine that we actually have this amount of risk? Well, it's been stated that banks are not allowed to own properties in the first place. So if you can't actually own the property and you can address whether or not you're really owning the property, what's the point of even asking for that time frame? Jazakumullah khair.
As to your first question, you've raised essentially an impossibility. And the reason why is the regulators...
It's not him, it's the sound system. No, it's not muted.
Because there is a Community Reinvestment Act and we get examined for it, the examiners come and look at who we gave money to, whether we make any announcement about it or not. So even if we have no intent to profit, it still gets added into the equation. So at that minimal level, there is no way we cannot profit from having made a charitable contribution.
How about outside of that?
It is our intent that we will not profit from it, and we don't go out of the way to put out press releases saying we donated X dollars to Guidance Academy coming from our irresponsible customers' hides. We don't do that sort of thing. Your second question, remind me your second question.
It's, you asked what
the amount of ownership.
And how can you own some? Do you agree that the fact that a bank cannot own, and do you agree that you're not really owning? If you could just answer
the bank can own property. And the bank can own property for a set of very limited reasons. And the element that really shows that is an Ijara transaction. Because in an Ijara transaction, we may have, in this case, a subsidiary own the property for 25 or 30 years. So there are occasions that fit with Islamic finance where we can own the property. There is an interpretive letter for Ijara, there's an interpretive letter for Murabaha. Both of those were obtained by the United Bank of Kuwait. Abdul Hakim Dyer shepherded those through the process. It was at a time when real estate ownership by banks was very much disfavored. And there's a little bit of politics that is going into those interpretive letters where they are trying to fit around one of the regulator's cubby holes by saying, no, really, we have no intent to own this. But there is a provision in at least the Illinois banking statute that says you can own property if it is incident to the business of banking. And I would argue that if we are financing somebody's house, that is incident to the business of banking. Politically on our side, if we are talking to the regulators, it's much easier for us to say, oh, there's an OCC interpretive letter that deals with this. It sort of ends the discussion. We don't have to get them to research what is the scope of this provision. Has it ever been used for this? Should there be limits to it? You know, we did try to look into Tawarruk at one point before we knew how disfavored it was from a fiqh perspective. And we were trying to find, how can I get a container of soybeans? Because I'm going to trade soybeans as a mechanism to attach debt. And now I'm looking at Indiana banking law and super wildcard provisions in Illinois banking law and getting interpretive letters from the Indiana banking regulators to give to the Illinois banking regulators to try and shoehorn this in. If I can rely on an interpretive letter, all that goes away. But there are provisions where banks can own real estate. I just don't want to have to argue how broad that scope is.
Thank you.
First of all, this is for Mr. Loundy. Thank you very much for your flexibility, your willingness to listen to the interests and needs of your Muslim customers or clients. The fact that you're trying to make profit does not actually take away from, you know, the fact that you've shown flexibility and you wanted to listen to your community, like Muslim members of your community, and wanted to provide a good product for them that is actually compatible with their own value system. And your Muslim counterparts are also trying to make profit, and they're also trying to protect their assets or their investments. So that does not take away at all from, you know, our appreciation of your willingness to listen. And I want you to just consider this to be like an opportunity to look at it positively, because you may think like you're like Alice in the Wonderland. You're hearing all kinds of questions that are coming from the right and the left, and some of these questions have been already resolved, and we already have standards, IOFI standards, fiqh assembly standards that had already answered many of these questions that you're hearing one more time. We do not, like, this could have been made in two steps, where we could have agreed on some standards that we will accept as Amja, and then reached out to the representatives of the companies and addressed those standards with them, and where they have challenges to meet those standards and so on, provided counsel as much as we could. But we have allowed the representatives of the company to actually peek into the, you know, this wonderland. It is very positive because we allow intellectual discourse. We allow freedom of positions. The positions of the fiqh assembly would not bar someone like Shaykh Jamal Zarabozo from, you know, denying the legitimacy of the binding promise. It is his right, and if he has, you know, substantiation for this, then it is his absolute right. And he has the substantiation of the majority of the earlier scholars, then it is his absolute right. It may, however, be an issue of process, where we could have just presented the IOFI standards and said, where are we not meeting the IOFI standards? And that is part of the benefit of the codification of Sharia, so that when we can actually reach out to other organizations, to other entities, to other banks, we're not actually starting from scratch. And it looks like we're starting from scratch with some of those points that have been raised. But we appreciate your willingness to listen, and please consider this to be a positive experience where you can actually peek into or look into this and just like behold this beautiful discourse which will help all the representatives of the companies understand more about the objectives and goals of Sharia. The Sharia does not want to immunize capital, because to give immunity to capital, someone will be losing. You know, all ventures in this life, all ventures in this world, you know, are subject to loss and profit. And when you immunize capital, someone will be losing. And that is the difference between a Sharia-based system that protects the rights of the less fortunate and the unprivileged and so on and so forth against the hegemony of capital, where money begets money, and the widening of the socioeconomic strata happens at like speed light. So that is finally the objective. But there are certain mechanisms and techniques by which the Sharia tries to realize this objective, including, and most importantly of them, الضمان الخراج بالضمان الغنم بالغرم, liability and profit go hand in hand, or profit follows liability. So that is why the most crucial issue that we're discussing in the Murabaha particularly is that window where the banking, the institution or the finance, you know, the financing agency will be liable, so that it could deserve the profit.
جزاك الله خير شيخ حاتم.
بسم الله الرحمن الرحيم. My name is Muhsin Asinger and I'm coming from Sweden. My English is not very well, but I try to speak in Arabic if there is someone to try to translate it إن شاء الله.
تفضل.
طبعا السلام عليكم ورحمة الله وبركاته. اسمي محسن آسنجر وأنا أمثل جمعية في ستوكهولم عاصمة السويد، والجمعية اسمها المركز الثقافي الإسلامي للجالية الكردية الموجود في ستوكهولم. فطبعا ما شاء الله النقاشات اللي صار بالنسبة للربا والقرض وهذه الأشياء، فنحن من في يعني الثمانينات أواخر الثمانينات يعني ناقشنا هذه الأشياء مع بنوك يعني كبيرة ومعروفة في السويد، على أساس يعني مثل ما قال تفضل الشيخ قال يعني المرض، يعني نشخص المرض نحن دائما سبحان الله، لكن ما عندنا علاج. يعني كل مؤتمرات يعني نجلس ونناقش كذا وكذا وبعدين التوصيات بالأخير ما في علاج سبحان الله. فإما هذه التقصير من عندنا وإلا من الطرف الثاني. فاللي احنا لاحظنا مثلا التجربة اللي احنا عملنا خلال هذه السنين مع البنوك الموجودة في السويد، وأكثريتهم يعني يتعاملون في الدول العربية ومع المسلمين. فيعني قلنا صراحة أكثر من 10 يعني 15 جلسة معهم، فأعطيناهم الفكرة، وهم كان عندهم فكرة عن بالنسبة للمرابحة وهذه الأشياء، لكن النتيجة كان هم قالوا صراحة احنا ما نقدر نتعامل بهذا الأشياء اللي انتم تقولوا، لأن احنا أول مرة في عندهم خوف بالنسبة للربح والخسارة، وثانيا ما يريدون يجازفون بهذه الأشياء، هم قالوا صراحة. لكن بدل هذه الأشياء هم دوروا على حلول ثانية، اتصلوا ببعض الجمعيات الأخرى فاتكلموا معهم، قالوا إنه احنا سامعين إنه في فتوى، هذه الفتوى الشاذة اللي قالوا إنه ممكن يعني واحد يعني يتداين بالبنوك ويشتري البيوت وهذه الأشياء، والمصدر هو نفس المصدر القديم من إمام حنيفة رحمه الله أو ابن حجر، فيعيدون نفس الأخطاء، والعلماء جاوبوا هذه الأشياء. لكن هم عينوا مع الأسف محمد وعبد الله عندهم على أساس أنه يجيبوا لهم يعني الأشخاص يعني يقرضون من تفضل فيعني مختصر إن شاء الله. فلذلك الآن هم اللي موظفين والمسلمين يتصلون بهم يقولون هذه الفتوى موجود. فأنا سؤالي للأخ لوني اللي اسمه من البنك، يعني هم بالنسبة لهم يعني كيف هو يقدر يخرج من أمر المسؤولين اللي في البنك ويخدم المسلمين، أو هو بس يعني لازم يطبق مثل ما هم يعني يأمرون عليه؟ وجزاكم الله خير.
He's asking, can I talk? He's asking, are you trying to comply with the system or try to abuse the system and just establish your own Islamic finance to satisfy your Muslim community? What are you doing exactly in Devon Bank? Are you challenging the current system, or what are you doing? This is briefly what he's asking about.
Okay. The short answer is we are trying to fit within the system that we have. But where we can, we are trying to challenge the system. We just got back from Dubai, where we were finalists in the Thomson Reuters Abu Dhabi Islamic Bank Ethical Finance Challenge Awards. We created a product, we made it into the final 3. It's not a product we can offer through the bank. But I'm hoping to find investors that will step out so that we can offer these products, not through the bank, but through an outside investment company. We are willing to go around the system where we can find investors who will work with us to come up with new products, better products, crossover products that are attractive to Muslims and non-Muslims. But without the investor support, we have no choice but to work within the existing system.
Thank you.
Bismillah. I have one comment to Mr. Loundy and one question to Dr. AlQudah. So I'm going to start with the comment. Thanks a lot for your contribution. Like, I'm coming from the Quebec experience. It's very high level of frustration. So really this exchange is a win-win situation for the community and I think for the banking system that you represent. And we appreciate your contribution and your listening, so thanks for that. My question, Dr. AlQudah, in the morning, Dr. Ghalayini mentioned al-manzila bay al-manzilatayn, like some kind of compromise. And based on my experience with the product development in the Middle East and Malaysia, they avoid the issue of ownership with the wikala contract, like double hat before the ownership. So what do you think about using, just for my own knowledge, and I think it's going to help a lot of people to understand, like their usage of wikala before the ownership. So when the buyer would get into a wikala contract with the financier to acquire the right of ownership for a certain amount of time and then close the contract. Jazakallah khairan.
Two things, Akh al-Karim, here. The basic concept of al-wakala, or power of attorney, which is absolutely permissible. In other words, the bank can give a power of attorney to the potential client to act on his behalf and to buy the property to save the time's money and effort. And at the end of the day, everybody will be happy, as they say. And the other thing, which is how to implement it. How to implement it. In other words, do we apply what we write down in the book? Are the standards that we adopt as a Sharia advisory board or a bank, is it really implemented genuinely, soundly? That is really, there is no skipping of one step, which is the ownership of the bank. Is it really the client representing the bank in buying the property? Is there any certain moment in which the bank is fully responsible for any potential damage or collapse or whatever natural disaster that might happen or occur, for the house? If the answer is yes, and that is proven on the ground, then al-wakala is fine. But what is unfortunate here is that sometimes you can tell that there is incompatibility between what is written in the book and what is implemented on the ground.
There's less than 2 minutes, so inshallah, if we can try to speed up and get everybody in if possible, please.
I'll make this quick. I just wanted to thank Devon Bank. I want you to be successful. I want you to make money as well, and that's no problem with that. And if anybody, any financial institution who moves towards Islamic financing, I encourage them, and thank you for that. My real question, my own experience with Devon Bank. I was given an appointment. The agent came over to my house, and I wanted to see the Devon title that they've bought the house for me. And the answer was, well, we're gonna do that, but sign here that you are purchasing this house from Devon. So I was buying the house before even Devon owned it fully. And it boiled down to, as my understanding from the agent, that it's going to be one transaction that will be recorded, two titles on the house. The first one is with Devon, and the second for myself. But it was the same transaction, so they really didn't own the house, at first. So my question to you, as a bank, did you take any steps to kind of try to own the houses or the property, to fully own them and register them to a point where you could actually present a title to the buyer? Thank you.
Well, I can't speak to your specific transaction, but our closing instructions make clear the order that the documents are supposed to flow in. They have to be recorded in the proper order so the chain of title shows the property moving from the supplier to the bank and from the bank to the customer. And we do try to talk to the title companies, and if there's an attorney involved, to the attorneys working on the transaction to make sure that the proper procedure and order is followed. In the execution, we do thousands of these transactions, and I cannot attest that all of them are following every step at every point, but I can attest that there is an insurance company who is obligated to do it in the correct order, and they're putting their money behind making sure that that happens and not producing a cloud on the title, which would otherwise happen if they did it in the wrong order.
Thank you for your answer. I believe that the titles were registered in order. The problem was, at the time when I bought it, I didn't have the Devon title that they owned the bank. That was the argument.
Actually, it is, I'm sorry, it is part of the closing package that goes to the title company. The first document that assures that this transaction is done in the right way is the assignment to the purchase contract, which is a legal document which replaces you with Devon Bank as the buyer. You may not have seen it, but it should be in your closing package. And the next thing is the title comes directly from the seller to the bank. You get a copy of the title from Devon Bank to you, which is a document that is recorded by the title company and mailed out to you. But again, I don't know about your specific transaction, but that's the sequential order that the title companies are required to follow according to instructions.
At the time that I signed buying the house from Devon, did you actually own the house? That's the problem.
Yeah, like I said, the assignment to the sales contract.
The problem is you didn't own it.
Let's not, if it's possible, just so I can interrupt, it's not a personal issue now that we're going to discuss. If you have something with regards to a contract that you had, inshallah, you'll be able, you'll be sticking around,
Sure.
maybe you can address it.
Sure.
At this time, we're going to ask, because this session is over, that we remain seated. Inshallah, we have presenting to us two of our sponsors, Mercy USA, as well as Halal International. So we ask that inshallah for the next 20 minutes, that if you can please be seated and give them your attention. Jazakumullahu khairan.